It's already 12:11 right here.
Yep.
And then I could I'll go first just because market like just going over
Yeah.
the basics of market structure is probably more important to do that first, and then you could cover the whole time frame correlation thing.
Yeah. Definitely.
Let's see. So
That's
yeah,
how we have it in the course
we're
too.
gonna cover. I mean, this is per se beginners kind of lesson here, but it's also for you guys that are, more intermediate level. Just a nice refresher for everybody. So I'm gonna hop on, pull up like a fresh chart here. You see my screen, right?
Yep.
My computer's freaking struggling today. Let's see, is this good?
Mac. Uh-oh.
Holding. Holy shit! Look at this thing. I'm gonna bring up fresh chart. This is gonna be very similar, guys, to how we kind of teach it in the course. Give your number.
On the end of JPY, we actually don't trade that one that often. Again, I don't trade US 30 either, guys. So like the pairs that we put out for you guys, like the analysis that we do every week, is really the main pairs we focus on. I mean, there are some others, but I mean, so like some of these are acceptable, like US 30. I mean, we just don't trade it that often. But when you guys are throwing out some funky pairs, like someone said, like asking if you trade like NZ ZAR and stuff, like no, we don't trade those kind of exotics. We stay really around pairs that are influenced by the dollar mostly, some majors, some crosses.
Yes, sir. All right, so guys, whenever we look for market structure, the way that me and Nick trade, at least, we are swing traders. So the main time frames that we're looking at are really the daily and the 4 hour. But we do start on the monthly and the weekly time frame just to kind of get an overall direction. Where's the market, where are things headed? So I'm just gonna kind of do like a full breakdown here, and then we'll get onto the lower time frame. We'll break down. We'll go over some lessons in market structure, and we'll kind of get right into it. So on the monthly, the main thing that I'm gonna do is I'm just gonna bring on some of our support and resistance levels. This is kind of the main time frame that I'm just putting these on. So we could just kind of focus in on here. We could see the trend is very bearish right here, and then obviously, it's starting to get bullish more in this area. So I see right here we have this level. We got support here. We've got resistance here. So I'm going to mark this down as one of my key levels right there, and then I'm going to start to search for another level as I move lower. And there's got to be resistance and support on both sides. So see how there's all resistance here. There's not really any major support. So I want to keep moving down, moving down. Do I see something more significant in this time frame? Where do I want to put my next kind of support level? And I also want to keep in mind that these levels I want to put about 1,000 pips apart. We do kind of use like quarters theory to an extent. So this would be about 10,000 pips apart. So I'm going to place my next level. This kind of looks like the most significant. We have resistance here, support here, resistance here. I'm going to just label this my monthly level as well. And then what I do is I come in here, cut this in half, and then I place a weekly level right in here.
If you're unsure about that level too, guys, you could switch real quick back to the candlestick chart to check it, and then back to the line chart.
Yeah,
You know,
so if you want us like kind of confirm, where am I placing this level? Does it make sense? As you can see here on the candlestick chart, clearly resistance there, clearly support here, clearly resistance all along this line over and over again. And then back at these highs right now, we've got support here, and I can even adjust this a little bit, bring it up a little bit more based on like this wick, and then clearly resistance here. So for GU, this is where it kind of looks like we're heading into right now, back into this monthly level. But let's start to go down now to the weekly, kind of get a one look. How is structure looking like on the weekly time frame? So what I like to do, guys, to kind of mark down structure for everyone that's struggling with, how to how to tell, are you in a downtrend or an uptrend? First, let's kind of just start. Let's get away from the chart a little bit. Let's just run through like a little example side here. So this is clearly I'm just going to outline a downtrend. So we're making lower lows and lower highs right here. So these would be our lower lows, lower high, lower low, lower high, lower low. So until every time this low breaks and we form this new lower high, we're moving this is our like most recent lower high. This is our point of structure. So as this one forms, basically until this level is broken, guys, we are still in a downtrend. So this thing could push up here, push all the way up to this level. As long as this is respected, we are continuing to be in a downtrend. And I like to just highlight this, on without the candlesticks, without the chart and everything, just so we can kind of make things a little bit more simple for you guys that are struggling with this concept. So once this breaks, so we have this level respected, say we make this new low now, and I'm not even gonna, we do use fibs to go over how to actually designate like what's a lower high from not being a lower high. I'm not going to get into that too much on this webinar because we don't need to. We're just going to cover like the basics right now. But basically, once this low breaks, remember we need that next lower high to form. So it forms right here, push to this new low, and then we move down. This would be me on the chart moving down my like in my mind, I'm like, this is my 4 hour resistance or whatever time frame I'm on. And then this level breaks. So once this level breaks, guys, this is then a breakup structure right here. This is what we're looking for. The trend is going to be then shifting from an uptrend or downtrend into an uptrend. And whenever we get a breakup structure, the first area that we're looking for entry is going to be on this first higher low. So whenever that first higher low forms, just to give you guys a little bit more information, what I would do is I would fib from this low to that new high, and I'd be saying, okay, I'm waiting for a higher low to form, and a higher low would not form. That's so annoying. Until, just gonna push this back. Just gonna push all this back a little bit. Right here. Boom. All right, cool. So then a higher low would not form until we at least hit this 38.2 level. So see how we're coming in to this 38.2 level. We're hitting that resistance. This is where we would be wanting to buy. This is where we would be wanting to put our first buy order, be checking out on the lower time frames, potentially looking for an entry based on a lower time frame break of structure. So once price found support at this level and then started to head higher, then we would officially be in an uptrend. This downtrend would officially be broken. Now, say on the flip side, it does not find support here and it continues lower into this 88.6 level. We are still in an uptrend. We've still broken structure. We're still made this new high. We're still looking for support at some level. Even all the way down to this 100% level. At that point, we would have a demand zone on the chart right there. And then say we found, and I'm going to just kind of expand on this a little bit more. Say we found support at this level down here, and then we started to move higher. We came up to this 61.8 level, and then we started to, like, this is one thing you guys got to realize, like, if price retraces this deep to 100%, then it's not going to go right from 100% all the way to our target, negative 27. It's going to start to form a trend on this lower time frame. The market will always trend, and the trend is your friend, guys. So hit that 618, move up. It's going to hit that 38.2, move up, until we eventually do get to that, ultimately that target. This thing's so fucking annoying. Can't move it over. So another thing is once this low is met and we find support here, this then becomes like our support level. Okay. And then once we push up, we pull back. Remember, we're now in an uptrend. So this becomes our higher low. And then we push up, we pull back. Now this level becomes our higher low right here. So I'm going to just delete all this. And now we're going to go over just an example as if we were in an uptrend. And I'll bring on the fibs just so you guys get a better kind of understanding. Someone said, so on a downtrend, the breakup structure is confirmed by the higher high or as soon as it breaks previous high. Yes, that is correct. Show your fib settings real quick so I can take a picture, please. Damn, my guy's trying to get in on the fib settings. my dude's trying to slide in real quick.
Hustling, man.
Yeah, my guy.
Whatever he's got to do.
You know what, man? I respect the balls to ask the question. I mean, these are the fib settings. You can see them right here. These are all the levels that I have marked on here. So let's kind of expand on this now. I'll actually go over using fibs. So in an uptrend, I'll label everything out. And again, this is exactly how we teach it inside the course, guys. So you guys are getting the beef of market structure, which is really the main concept to understand when it comes to trading. So in this uptrend, we have these higher lows right here. Boom, higher low, higher low, higher low. And then on the flip side, we have these higher highs, higher highs. And I'm just going to mark down over here another little example for you guys. And I'll cover this in a second, what this means, but it's good to have this. So this is from downtrend to uptrend right here. And then we're going to have on the flip side from uptrend to downtrend right here. Yeah, maybe if you want to expect like quarters theory, I mean, it's just basically utilizing like round whole numbers.
Right. So with that month, so the first thing we want to do with those monthly and resistance levels is we are breaking down the chart where we've seen a lot of reaction before, and especially on a higher time frame, that takes a lot of volume to either hold price down or push price action up. So, yeah, that hurt.
My guy's getting taken out.
Yeah, my foot just hit this freaking metal desk. So we'll find the first two levels at where we think is the most significant area on the chart, and then we'll take that measurement and then apply it throughout. And then there's like a psychological aspect to it too, right? We'll go to nice round numbers, and we're not expecting price action to stop on the exact pip, but we know that this area is an area of significance. So we'll apply that throughout the chart in those measurements. And then obviously as we get closer to more recent price action, relevant price action, and then you'll notice that these levels just have weight. We've tested them in the strategy. We've been using them for a while. They do work a lot, and it actually, it's the foundation for the chart. I mean, that's how I use it. If I find one of those lines are off, or I don't like the that first step of analyzing, I'll just restart the chart, or I'll just find a new level, or I'll just just take it even slower and then just work my way from there. Because precision is kind of everything. You really want to make sure that your chart is set up how you want it, based on what you look for. So yeah, I mean, that's how I use it. That's how we use it.
Yeah, I mean, it's basically just what prices are the most money going to move and shift around in. And we just find that using the quarters theory or using these like psychological numbers, there always seems to be like a lot of movement around these levels. So it's pretty wise to then look for entries and look for potential setups in those areas.
Right.
So here we've got, I just put up here so you guys can look while I'm going through this. This is obviously a downtrend into an uptrend. This right here would be the break of structure in this situation. And then this right here would be the break of structure in this situation. So I'm just gonna right here, break of structure, break of structure. So what's going on here, guys, in this example, we're in a downtrend. The previous lower high, is confirmed, and then it's broken, like I just went over. We're looking for, once this new higher high forms, we're looking to see that first higher low. That's where we're looking to buy. That's where we're looking to get in on the new order. And this applies on literally every single time frame. And then and then an uptrend to a downtrend. So we're in an uptrend, we're forming higher highs, higher lows, higher high. When we break this higher low, we're looking for that first lower high in order to enter into a sell order. And this is again a break of structure. So let's look now back onto this chart down here. So say we're in an uptrend, we're trending higher, making higher highs, higher lows. How do we denote what a higher low is? So I'm going to take this all off right here. And what we do is we use our fibs. So we actually use our fibs to like go over, you know, what market structure is. So say we came up, made this high right here. I would fib from this low to this high, and I'm saying, okay, until price meets 38.2, we are not forming structure. So if it hits here, I don't even have my 23.6 on here anymore. Some people do. But you know, until we hit this 38.2 level at least, this is not significant enough of a pullback to then denote it as structure. And think of it logically, like all this is showing us is that buyers are in control, and then sellers step in an uptrend in a buyer's market, and they say, okay, we're driving price down to a specific level, you know, while buyers are still in control, and then buyers need to step back in and say, okay, this is the lowest price that will go in this uptrend. We're going to then start to buy this back up, and we're going to send this thing higher. Um, so that's what's forming here. So whatever level it comes to and finds support at, that becomes a significant price for us. That's the price that buyers stepped in and said, okay, this is the final level that we'll let sellers drive this to. And then if that level breaks, you know, we ultimately are breaking trend. We don't want to be in the trend anymore. So say that price comes down to this 61.8 level, we push up to 0%, and then price comes down to this 38.2 level, comes back up. So I want to show you guys, we are not going to move our Fibonacci, our fibs, until we break this 0% level. So this thing could keep going, could keep consolidating in this area, could come down to now this level, and then finally push up. We're not going to move the fibs until we actually break this 0% level. And as you can see here, we have this level was our higher low. Then we pushed up to this level. This then became our higher low. Then we pushed up and had this pullback here. And because the fibs are still on in the same area, like this is not significant. So we're not saying this is a higher low. So pretty much why I want to make sense of that. So we just pushed to a new high. What I would do is I would actually fib from this low all the way up to this high. I would fib right through this, right? So now I've got my new, you know, higher high here. We're waiting to see, you know, does it pull back to this level, whatever. So all of a sudden it pulls back here. This is a minor level of support, guys. This is a minor level that is being broken. We're still in an uptrend overall. So this is a very important concept to understand. We're still in an uptrend. And then as price starts to, you know, do its thing down in this area, we start to consolidate at the bottom here, start to range, blah, blah, blah. You know, then all of a sudden, boom, price pushes back up in this uptrend. And then what does price do after that? Price comes down to this 61.8 level, pushes up again. So all of a sudden, now we had a lot go on right there. We pulled back to this 88.6 level, consolidated a bit, pushed up to 0%, pulled back to the 618 level. This is now our most recent high or low right here. And then we just broke a new high. So we just formed a new high right there. So we're going to refib to that new high. And then all of a sudden it comes down. We're looking for support, and then price breaks. Price breaks to this low right there. And then remember, after a break, well, you know, the first thing that we're looking for is that lower high there. So I'm going to throw in some, as I'm going through this, I'll throw in some quizzes here. Maybe we'll do a giveaway if someone answers freaking these questions correctly. We'll see who's fucking paying attention out here, including you, Nick. See if you... Let's see. But yeah, so this is like becoming a more advanced example. But so once this breaks, look at what this is. This is this chart right here. We're in an uptrend. We had the break of structure. Now we're looking for that first higher low. You know, ideally, where are we looking for entries, guys? Always. We're looking for entries at 38.2 and 61.8. Those are my golden levels there. Those are the bread and butter, as they say. So that's where we're looking for price to come to take our entries, to get in on trades. So say price, you know, came up to that 61.8 level, then it confirms that's our new lower high. So that's all this is this example. We're in an uptrend, we just transitioned to a downtrend, and we're always trying to take sells in a downtrend at lower highs, buys in an uptrend on higher lows. I'm going to write that. Sells in a downtrend on lower highs, buys in a uptrend on higher lows.
Only. No exceptions.
No exceptions, guys. So if we catch you taking fucking sells at higher highs or whatever the fuck, like you
We're
guys
gonna
are,
send
or
our guy.
lower, if we catch you taking sells at lower lows, I mean, then
Yeah.
you're cut off, you're done, you're beat to us. You're cut off. Like we're no longer fucking with you anymore.
You're in the corner. You're in the corner for a week.
You're in the corner.
You can't sell at lows and we can't buy at highs. It makes zero sense.
Yeah, so these are in this uptrend, guys. This is, what are all the potential opportunities to buy? They all come in here. They all come in here. All these higher lows that we're forming as price comes into this level. This is where we're trying to buy. We're not trying to buy up here. We're not trying to buy up here. We're not trying to buy up here. We're not like, oh, it's gonna break the resistance. Like, no, like until it confirms that it's broken and we're taking some sort of lower time frame entry above that resistance. Like we're not buying there. So we're trying to buy at the higher lows. And again, there's more complex strategies, guys. This is just very simple, very easy to understand market structure. If you guys are struggling with like where to take trades and stuff, just simplify everything. Just make it really simple and just be really disciplined. Like there are certainly many opportunities. You could be in an uptrend. You certainly could counter trend trade, sell at the highs. Like there's many things you can do, but as a beginner, guys, you gotta keep things simple. If you don't make money now, don't try to be the master of all trades. Just master one. Golden. Yeah, so easy to remember these rules. So these were all the buying opportunities, all these areas. This is a selling opportunity right here. So this is an example of an uptrend. Using fibs, how to actually, denote what are higher lows, everything like that. I'm just going to take all this off. And for you guys that joined late, this is all going to be recorded. It'll be posted on YouTube completely for free. This is really the same lessons that we teach inside of the course. We have a video on market structure. We do get into some more like candlestick combinations and some more in-depth kind of like lessons.
Yeah, they're long videos, very, very long.
Yeah, but we're giving you a lot right now. We're giving you, most the beef of the topics right here. But the main thing you guys got to understand is just how to use your fib, to essentially denote market structure. There's many ways. There's no right and wrong way to draw down market structure. It's really like the chart is essentially like your canvas. Like you need to understand like this is fundamentally how I'm going to draw market structure, and then you live and die by that method.
Yeah, exactly. And if it works for you, right? Like we're not saying somebody who has a completely different strategy than us or that looks at the market differently like can't be a successful trader, because again there's tons of different styles. Everyone trades a little bit differently. Everyone finds their own little twist on it or their own style, and this is what's worked for us. So we'll share it with you guys. We know it's proven. We know we've worked with it for years. So
yeah, so let's just go over now. Let's go over an example of like a downtrend. So we're going over this example right here. We're drawing our fibs right here. I'll actually clean this up a little bit for you. So we had our previous lower high formed right there. I started fibbing from that high, and then we came down, we formed our new low right there. Now we're looking for the retracement. Remember, if we don't pull back to 38.2, it's not structure. If we pull back here, it's not structure. Here, it's not structure. It's got to at least wick 38.2. So it comes up to 38.2, comes down, tests 0%, pushes up like this. Now, what would you guys say happened in this situation right here? We just pushed down to 0%, came up to 38.2, pushed down to 0%, and then we just came up past this level, this 38.2 level. Whoever guesses this, we'll give you guys a fucking Lambo or something. No, but if you guys can guess, like what is this exactly? Yeah, break of structure. So a lot of people get confused. They're like, oh, does price need to push past 0%? Does price need to do this or whatever? Guys, if we reject 38.2 and we're not even going over the moving averages right now, like there's obviously more advanced concept, like more things to go over when it comes to this. But when it comes to this level, say we came up here, we hit 38.2, we pushed down, the moving averages, this would mean the moving averages were crossing here and everything. So this is now a resistance level. We just came up, we broke this level. So we went from a downtrend, right? We're looking at this example right here. We just broke the resistance right there. Boom, made a new high. Now let's draw it back a little bit. And let's say came up right here, pushed all the way to 88.6, came down, pushed up. Because remember, guys, the deeper we retrace here, like the 38.2 is going to be quick. If it hits 38.2 and rejects, it most likely will push right away. If it hits 61.8, it most likely will push, retrace to 38.2, push lower. If it hits 78.6, 88.6, 100%, things going to take a fuck ton of time to start to push around. Like most likely.
Exactly.
Most likely, because if it's gotten that high up, that means the 30-minute or whatever, like in our case, the 30-minute, the 1 hour would then be transitioning. It would be completely in an uptrend on the lower time frames, and there'd be a lot to have to happen for this thing to push down. So let's now look. We came up to 88.6. This is our lower high. Push down, came up to 618. Push down. So again, this then right here becomes our most previous lower high. When we draw our new fib, we're not drawing from here. No, we are drawing from our most previous lower high. That is this level right here.
Right.
And why is that? Because we're using the fibs like to protect ourselves in trades. Like we're using this 100% level. If this level breaks, then we're not in a downtrend anymore. I have different fib settings. Yeah, that's cool. Retest previous resistance, found support to find more buyers. Yes, sir. W formation, retest of the neckline. Yeah, it's a breakage structure. That's what the answer we're looking for. What is your YouTube channel? Yeah, the YouTube channel is just Forex League. All right, so as we're coming down now into this 0% level, we start to push up, and you got the same thing happens. Come down, and this is when people get all like flustered, and they're like, "What do I do? What do I do?" Like, no, just keep your fibs here. Just keep taking sells at these lower highs, guys. It's simple. Use market structure to your advantage. Keep taking sells at these areas. This is a very clean sell opportunity right here. This is a very clean sell opportunity.
He's drawing from wick to wick fibs. So in a downtrend, it's bearish wick to bearish wick, and then in an uptrend,
wick to wick. I'm gonna hop on. We're gonna spend like 10 more minutes on this topic. I'm gonna go on to the actual candlestick chart, and then I'll show you what to do on a real chart. So we're not just doing hypotheticals here on the lot with the line. So again, these are all opportunities to sell, and then the same thing happens, guys. We refib, and then all of a sudden, price for whatever reason pushes up, breaks trends, flies to the upside. First thing we're doing, refib, waiting for price to hit one of our levels. Say it comes down to this level, pushes up, comes down to this level, pushes up, also starts to form some sort of ascending triangle there. So then this becomes two opportunities right here if you got the balls to buy. Right there. So this is very, very simple. You can also start to bring on some other things. You got trend lines in here. So you wanted to like bring on a trend line, draw it a little bit cleaner than I do. You can see clearly in a downtrend right here, breaks into an uptrend. A lot of confluence around that area with the trend line. So there's a lot of different things.
You can start identifying patterns and MAs as well.
Someone said, where do I take my profit then? So you can always use these -27 and 618 areas to take profit, guys. I mean, it depends. You got to really test your strategy. If you're actually testing your strategy on a demo and on back testing it, then you could just develop rules for maintaining your orders. The rule that I use right now, and I hope to improve on this one to make it a bit more complex, but pretty much what I've been using is whenever I reach 1-to-1, which means you just bring on. Say I took an entry here. Oh shit! What the hell's going on here? I guess because I'm like zoomed out a fuck ton.
Yeah. Or yeah. There you go.
Oh my god.
You were zoomed in. Yeah.
Oh my god. Here, my bad, guys. Let me try to get this back to
Isn't
being
exactly Paint, Microsoft Paint or whatever.
representable.
Or
So,
Pictoshop.
so say I took, just bring this on. Say I took a buy opportunity or something. My stops, obviously your stops are going to be 300 pips, but say my stops were 300 right here. Whenever I got up to 1 on my with using this long position tool, I would roll my stops to break even. That way, once I get to like 1.5 to 1, I could move my stops to then 0.5. Then I'm capturing profits. When I get to 2 to 1, move my stops to 1 to 1. This way I'm still in my order, or you could close half. You could start to close half your position, but you got to create rules around maintaining your order. You can't just get in a trade and hope it goes to the moon, guys. You're never gonna make money.
Right.
You got to capture
Yeah,
profits. No
tough.
one ever lost taking profits.
That's right.
Big
You
lesson.
can't just have hope. We gotta take it a step further and develop an edge. Actually, learn how to identify structure.
So when it comes to okay, now like we're gonna hop on a real chart. What do we make? How do we make sense of everything? So when it comes to the real chart, I mean the main time frames we're looking for structure is going to be the daily and the 4 hour time frame. So if we were to look at this entire uptrend right here, this entire like trend to the upside, and were to draw, what we just did. If you guys are trying to practice on your own, this is what I would do. I would just map out using this line tool. I would just map out this entire area. It doesn't have to be, completely precise, but I am going to go through and we'll run through a little example for you guys. We'll start just over here right now. So I'm going to bring this back. I'm going to go ahead and hide the candlesticks. And we're just going to do the same thing that we just did. I'll use my fib from this previous high to this low. Remember, unless we hit this 38.2, guys, we're not doing anything. We're not marking this down as structure. If I want to bring on the candlesticks to confirm whatever, I'm going to bring this, take these back off. So here, we pull up. We damn near hit this 38.2. This is my previous, to me personally, this is my previous lower high in this downtrend. So until this level breaks, we're clearly in a downtrend. So remember, once we break 0%, that's when I'm going to move my fibs. Break 0% right here, move my fib, and then remember, until we break this, 100% level up here, this fib level, we're still in a downtrend right now, and I'm also going to bring on, for the sake of teaching you guys, see if I can do this. All right, so we came up to this 100% level right here. We pushed down to this 60 or this 50% level. Now, until we break this 100% level, we are still clearly in a downtrend. So let's start to move this thing over right here. Obviously, right here, we just break. So I'm going to take my fibs. This is clearly the break of structure right here. I'm going to fib from this low to this new high. And now remember, we're waiting for our next level on our fib to be tested. Let's see if I can bring this thing up. Yeah, I can't. Fuck this box. I'll just leave it. So we came up 0%. I just refib. Now we're waiting to see where do we find our first high or low. First high or low was found at 78.6. Push up. Now we break 0% right here. So I'm going to refib from this low to this new high, push up to 0%. Remember, until we break this 100% level, we're still in an uptrend in this case. And now we came up, hit 100%, pushed up. came back to 88.6. Remember, these are all the opportunities to buy here, 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 and then we break 0%. So I'm going to refib here to this new high, this higher low right here. We push up, and we don't push back down to 38.2. So then once it breaks that 0%, I'm fibbing from this previous higher low to this new high right here. Our trading view under indicators, higher high, higher low, live by, will map out higher highs, higher lows. Yeah, like you utilize your indicators. Someone actually wrote in the chat a good way to do this. Now you guys can literally run through. You can do this all the way up to current price. If you have no idea how to interpret what's going on in the market, you could do this all the way up to current price. Now, if we were to come back onto the candlestick chart, let's actually just highlight all of the potential areas that we could have been buying here. So we have this. This was a potential buy based on it being at this higher low point. This was a potential buy down here. This was a potential buy.
I mean, I wouldn't. The only indicator to find structure that I would recommend would be fibs. I mean, the best way to learn it is to know it, is to just learn it rather than just using an indicator to tell you a higher high.
Yeah, like I hate all these smart trader
Yeah,
fucking weird indicator. Like guys, just learn it fundamentally yourself, and then you could actually look at indicators and you can see like put it this way. Like somebody said this in in the members chat yesterday. Like EAs work until they don't work. So, like you have to be the decision maker and then use things supplementally. Like if you don't know market structure, don't just rely on an indicator.
right. If anything, treat it like a tool, and you can't just use a tool if you don't know. If you can't just start using a tool without knowing how to use it properly and then expect good results. It's just,
I mean, it's just the reason you got into learning technical analysis, in my opinion, was to stop being frustrated with not knowing where you're buying and like why you're losing and all. So like don't then use an indicator to continue to lead to more frustration, because when you lose based on something that's out of your control, like it's going to be frustrating. I mean, if you bring that indicator on your chart, back test it thoroughly, really understand it well, then more power to you. Then you can apply that and utilize it to your advantage. Don't just bring it on and not test it and then be like, this is concrete higher highs and higher lows.
right. Because also, like, I mean, we've both tested tons of indicators. I've seen lots of indicators, ones like that as well. But you'll notice in a rally, right? Like as soon as you breach 0%, that higher high, mark, that indicator is going to show higher high immediately, and it's going to continue to show that higher high as price action's climbing, right? So it doesn't really confirm the high. It's just when price action reversed, that's where the indicator was left, essentially. So it's not really saying, hey, this is the definite higher high. It's honestly just following price action like we're doing anyway. So, if you know how to confirm it at something as a higher high, lower time frame transition or something, which goes along with time frame correlation, then you'll be able to spot that higher high well before an indicator is going to tell you. So that's why we definitely advise learning price action first, and instead of just kind of relying on an indicator. But to each their own. I've seen profitable traders using mostly indicators. Some guys use. Remember that one guy? It was on LinkedIn. I think his name is Remy or something, and he used a whole bunch of indicators. Great trader, but I've never seen somebody use more indicators. So, I mean, everyone has their own style. I definitely recommend learning price action first and then applying all the things you want to later on.
Okay? Yeah, price action is king. All right, so this is all the areas that we could have bought in this uptrend. I'm just gonna bring on the candlesticks real quick. And we're not going to get too in depth in this again, because this is just kind of a beginner's example. Someone wrote in there, what other confirmations can we use, besides the fibs or whatever. Say we were in this situation, we got our fibs on here, we fib from this previous low to this new high here, and now we're starting to get back onto the charts. We bring on some of the moving averages, you start to see, where are we at and everything. So we have a couple confirmations here. We're clearly in an uptrend. We're clearly at a potential higher low area as we had marked. Now we're waiting for price action. We're waiting to see, is price action starting to show us that the bulls are stepping back in. I'm just going to highlight this candle right here. This is clearly a bullish engulfing, another bullish engulfing right there. We're also double bottoming right here. And at that point, guys, we've got three confirmations. Then you could shift down to a lower time frame and you could start to say, okay, on this lower time frame, what am I going to do? I'm going to start to buy on anywhere that I see a potential higher low in this area. So we'll see. And you could be very disciplined, guys, in this sense. When price pulls back now, you can say, okay, I'm going to buy on whatever area a higher low potentially forms. I'm just going to play this over and over again. As you can see here, price came down to this level, and we would have started to buy in all areas like this. We're not going to get too far into actual entries, like lessons on entries right now, but I would have literally, our main entry rule is bullish variations through the moving average. So whenever momentum starts to pick up, I would start to take buys. Like this is a very clear buy. I wouldn't buy on this because a lot of like momentum here. And then where would I put my stops? In this one, I might have got stopped out. I might have put them a little closer right there. Or I could have been very conservative and I could have just threw them below this low because again, this is based on like a 4-hour swing trade. If I got stopped there, it's not the end of the world. I'm looking for the next trade, which would have been here. And again, this is just kind of on the fly, guys. This isn't exactly what we would be looking for right here, but the concept is very concrete. We're looking to enter on the higher lows in an uptrend. We're looking to enter on the lower time frame so we can get in areas that actually have a lot of value. We could use tighter stops or whatever. And we're just not going to get too far into that on this webinar, but that's pretty much what we're going to go over for market structure and building off of that. Nick's going to hop on. He's going to go over like how to shift between different time frames and kind of make sense of everything. And
right.
yeah.
So thanks for that. Now that you guys have a good understanding of market structure, you guys should be ready to make $1 million. So we're going to jump right into time correlation. It goes hand in hand, right? So it's essentially just getting you guys in the mindset of understanding what may be happening on a daily, is correlated to something on the 1 hour that we need to be aware of, or what's happening on the 4 hour, is correlated to something on the 30-minute that we need to be aware of, for entries and such. Okay, so as Angelo said, we're looking for structure on the daily, the 4 hour, and this is really going to become, exactly what we look for before we drop down to the 30-minute, right? So we're on the 4 hour here. So we see all these engulfings, right? We clearly see that there is a bearish leg forming, but then there's something happening on all these engulfings, right? All of these setups here, right? And what this is lower time frame break of structure, essentially. So it's the failing of lower time frame bulls and the higher time frame coming into play here. So there's a break right here. Okay, see how this engulfing? Whoops. Siri. There we go. All right, so highlighted, yep, engulfing. And let's just drop down and take a look at what's happening on the 30 minutes. So 4 hour is the 30-minute, as daily is to 1 hour. Let's drop down. Okay. So this was an engulfing on the 4 hour, right? And then look what's happening here. This is a 30-minute transition. Huge cross through the MAs. Also another 30-minute engulfing, right? Very strong bearish variation. Pullback, confirm the retest, right? Lower high, break of support, tested resistance. MAs are holding, and then that's the continuation. So this is your entry in here, right? So that's how we're using this, time frame correlation here. So we see something on the 4 hour, we drop down to the 30-minute, we spot it, and then we're taking entries that way. Okay, the same is true with the daily. Okay, and this is happening. Whoa. There we go. And this is happening, preferably with the trend in mind, because again, you want to have as many confirmations, lining up your trade, so it's highly probable. So again, so we see that the daily is bearish, right? We said there's a higher time frame zone right here, so we can anticipate some sort of reaction. So then we're dropping to the 4 hour, right? looking for that rejection, seeing these engulfings, then dropping down again, and then taking those entries. So it's very methodical. Okay, so here let's go on the daily. Let's do an example. What do we see on the daily? There's a bearish engulfing right there. Okay, at an area where we would expect or anticipate some sort of reaction, right? Key monthly. So then let's drop to the 1 hour now.
Yeah, and inside of the program, like we go in more depth over because people struggle with this. I remember I struggled with this.
It's a
You
tough
know,
concept.
if you see like a daily, like Nick just highlighted the daily bearish engulfing, like what time frame should I go to then to look at for structure on the lower time frame? Like you should start on the 1 hour, and then at the minimum you should be looking at the 30 minute.
Right.
If it's a daily move. So that's just like
Yeah,
another.
absolutely. No, that's a good tip. So yeah, daily to when keeps do this thing. It's so much better on the PC. I realize that. But anyway, yeah. So we had that daily engulfing, right? And then what is shown here on the 1 hour? This is basically a head and shoulders pattern. So within that daily engulfing, we have head and shoulders that played out, MA cross, and then a lower time frame transition right here. You guys can see this. I'll make this blue. Okay, and then we look for entries all in here, right, as it confirms this lower high and this move lower. Okay, so it's an interesting concept. It does just kind of get you in the idea or in the mindset of like jumping around time frames, knowing that there's something else going on that you may be missing on a lower time frame. This idea will also help you not get fixed on a particular time frame and then rather utilize all of them or most of them. Because again, guys, the more information you know, right, the more data that you're able to see and understand, within each of these candles on their time frames, the better chance you're going to have at turning a profit. Excuse me. So yeah, I mean, this is absolutely perfect to go along with structure. It may take a little while to really to understand it well, but essentially, we're looking for structure here. Actually, hold on, let me go back up to the.
Yeah, and like that, the example I went over about structure, guys, applies on every single time frame. So every
Right.
time frame, there's going to be lower highs and lower lows being formed, higher highs and higher lows being formed. When you highlight like Nick's doing on this daily, and you're trying to go between time frames, like you're essentially always just looking for structure on every time frame. Like here, he's fibbing from that previous high to this low. Right here, obviously came up to the 61.8 level. And then from here, it's like, okay, bump to the lower time frame like he was doing before. And you're just seeing, what does the lower time frame look like? What is structure looking like? And you're just trying to get on time frames where you can clearly see trends. Like you only want to trade trending markets.
Shit, I want to pull these fibs in. Hold on. Yeah, exactly. So like, again, I mean, you guys, I know some people are going to be like, oh, you could buy on a 15-minute, and then, it just depends on your style. I mean, the high probability trades are going to come with, favoring the trend, riding the trend. I mean, if you want to talk to me about 15-minute, 5-minute scalps, I mean, that's not really, relevant to what we're teaching. The structure's there, but we're not going to be counter trend trading a massive bearish leg here. Like, I'm not going to try and buy this low just to catch this pullback. Like, this just doesn't make sense. I'm going to wait for the pullback and then catch the large move dropping down to 90 here, So I mean, to each their own, but I mean, I used to be a scalper, been a swing trader for a while now. That's what works better for me. And this is almost 80 pips, this drop right here from 90.8 down to 90. So this is a good trade. Nice little potential trade here. So let's just see. Let's go back to the daily. All right, so came up near 61.8, right? Just to apply this to structure. We see that it came near 61.8, form structure, right? Came back down, gave us that engulfing. So that's something to be aware of. Again, you would then drop as you're seeing this form, as this engulfing forms, you're probably, what's going through your mind at this point? You see this huge rejection from this, confluence area. You're like, oh shit, is this gonna push lower, or is this gonna, find support here at 90.8? So the fact that you see this engulfing, that's a reversal signal. So now you would drop, right? Go to the 1 hour. And then like we talked about, we're kind of just connecting the dots. So we saw something on the daily. Now we're down here, right? We saw this huge push, pull back through the MAs, and then look, there's another entry opportunity right there. Okay. And then even if you wanted to do lower time frame structure, this adds to it as well. 38.2. It's a golden level. As Angelo said, how does price action react off the 38.2? It rockets, right? It just rejects heavily. Boom, that's your entry right there. So you had one here, all because we noticed something on a higher time frame, put 2 and 2 together, and realized we needed to drop and start looking at some trade scenarios. Essentially, I mean, the daily even would have been maybe even a little bit late. Like even as you saw this candle forming, you're seeing some rejection in this bearish candle starts to push lower. You could even just drop to the 4-hour and then do the 30-minute for an entry. Okay, because then you could have caught this candle forming, right? Maybe went right to the 30-minute. Caught an entry in here.
Yeah, and another thing, guys, is when every time frame lines up, like the weekly, the daily, the 4-hour, when they're all bearish, that's when you should be on the 30-minute or the 1-hour, and you should simply be looking just for sells. Like when at lower highs, like or whatever, like obviously there's breakout entries you could take too, like, but that's when you should really be on the lower time frame trying to just take advantage of the momentum.
So that's actually exactly what's happening right here, guys. So this is a great example. Everything here is pretty much bearish. We know the dollar's been bearish on, the daily, which is the most relevant time frame for, for what's going on. So we know that. And then on the 4-hour, clearly it's bearish now. So now all in here, pretty much what Angela's saying is all through here, you should be monitoring this for entries on a lower time frame, 1-hour, 30-minute. Okay, just kind of stalking this. We know everything already is pointing bearish. We're a couple confirmations and a couple moves away from an entry, which we'll spot on that 30-minute, right? Which is right here. Clear this up. And then boom. So what do we have? Evening star, exhaustion, bearish variation crossing through the MAs. Probably would have entered right on this candle here. Practically no wick, just closed right over the 200.
Yeah, and then if we were to go based on how I was just breaking it down, like guys, you would just wait because now it's breaking support and now it's at a low. So you would just wait then for the next lower high. Like whenever this thing pulls back in the lower time frame, whenever it shoots back up, yeah, you could just wait for the next lower high and that's where you would then enter.
So what we're doing here is look at all the confluence on this time frame. This is clearly resistance, right? It was resistance, then support. Now the MAs are right there and the 200 is just above it. So this is what we're looking for. Actually, I like the curved arrow. What the hell is it? Boom. There you go, guys. Yep. And that's it. That's a great little yeah. So this is real time too. We didn't scroll back. This is real time, guys. So this is what pretty much we're looking at for DXY. Love to see this pull back even, and start pushing lower.
Yeah. And then, you would, in this case, we're not trading DXY, but you would throw stops about at like 800, like just fib that push to the downside.
Okay, one second. That's it. Yeah.
So this is what you would be fibbing here from that high whenever it finds support. Like it still hasn't found support yet, but say that it started to pull back now and then it came up to that 38.2 or whatever, that area in there, you would throw your stops at about 110, like to be very conservative. You throw your stops at about 9,800, and then we'd be targeting, like Nick's doing, like we'd be targeting the 61.8, even lower.
I would even go, yeah. This is based on just this move here. We obviously know this is much larger, but I would, yeah, just because it's DXY and it's kind of different, I would play it down to the zone. But yeah, either way, look, so 2-1, right? Outside this low, or outside this lower high on the higher time frame, and then targeting down towards this lower zone near 90. Honestly, even a little bit like that. So yeah, right? Pretty textbook. I mean, guys, hopefully this makes sense.
Yeah, and I mean, all you're trying to get in on, guys, is like, remember, you're just trying to get in on trades and then let them run. Like if you can get in on a 1-to-1 on this one, and then you just let it run, move your stops to break even and let it go, like, you're really where you want to be. Most people struggle with the entries and getting into profits. Like once you get to a certain point, it's not about the entries and getting into profits. Like you're gonna be consistent in getting into good entries and getting into good profits, but then it comes down to how can you maximize your positions? Like how can you make rules that you will hold the orders longer. That's where everyone needs to work on. Like once you get to that point, you'd be considered more of like an intermediate level kind of trader. If you still can't get in on entries, like you still don't know how to enter and get into prop, like you're always getting stopped right when you enter, like you're just a beginner, realistically.
Yeah. Yep.
Like,
Essentially.
You have no profit, like you realistically don't have profitability. So
Which is okay, because you just have to recognize at that point that hey, you need to look for education and self educating through other communities or something. So as long as you know that you'll probably be all right. But if you're a break even trader for a couple years and you think you're the best, and that's probably not good. All right, let's see. So I'm going to put this on the chart for you guys. So this is just suggestions. Daily, 1 hour, 4 hour, 30 minutes. Okay. So do this, guys. Jump around. Go from the date. Look for examples on the daily. Go to the 1 hour, and kind of just try and develop this idea for you guys. Okay, because you need to be jumping around time frames. You need to be seeing what's happening on, the 30-minute, the lower time frames. That's where you'll be executing. So don't get tunnel vision on just the 4 hour daily. I know some people, or I've seen some people say like, I only trade the 4 hour, or like I only trade the 1 hour. It's like it's very different from trading a particular pair, guys. You can trade one pair, sure, but you need to utilize all time frames. All right. Otherwise you're missing out. You're trying to make a trade with only a fraction of the data. This is all information when you think about it. All right. So, I mean, what do you think, Angelo? What do you want to?
I mean, if you have more to go over, I'm down. Like if not, I mean you could call it fucking that's it. I don't really care.
I mean, let me see. Let's see what else we got then. I mean, do you have any questions? Yeah, guys, jump in chat, ask us some questions, see if you guys get this concept. If you want us to, the EMAs, yeah.
Does the breakup structure and entry apply to cryptos and other utilities? Yeah, I mean, you just need to hop on the chart, man, and just really test out. I mean, the crypto charts are a little bit uglier than the Forex charts, but you could certainly spot structure on those charts as well, and be able to kind of map out very similar entries and everything as like this.
So the thing with TA is that it's universal. It's just the market conditions change. So obviously crypto, Forex, stocks are all going to be very different. I mean, as most of us have seen recently, crypto's rallying like crazy, pretty much just going to the moon. So it makes it hard to find structure and apply these methods, because it'll be on a much larger scale. If you have a 200% rise, that's going to pull back. Yeah, exactly. Crypto's parabolic. So I mean, same with stocks that we saw recently with GameStop, AMC. You can't really apply TA to that. That's just driven from speculation, like something we haven't even seen. Like that was crazy. That was like the craziest chart I've ever seen. AMC or GameStop. So like it's nuts. So you can apply this stuff to most assets. But obviously during times of high volatility or news or crazy events like that, it's not really going to be applicable. But yeah, we're going to do a quick analysis on Youssef.
Yeah, I'll do the analysis. Let me see.
I will end with Youssef. Good old Youssef.
All right, guys. So let's bump up to a higher time frame here. So same thing that we did on the other chart. Higher time frames, kind of just a one look. We're clearly in a downtrend here. As we come down to the daily time frame, clearly in a downtrend here as well. But we also want to, utilize what we just did here. We could do it all the way on this daily time frame. We could do it on the lower time frame. Do it on here first. We have this low form. And do a pull back to this level, push down, pull back, and then we started to get this push down, pull back, right here. And then we have it like this. So if we were to take all this off and just kind of go in lesson with what we were just doing, we get fib from this high to this low. We hit this 38.2. Clearly, we broke this level of resistance, came up, made this new high. So in that case, we would be saying, okay, we're waiting to potentially form an uptrend. We broke this high, we came up, we're at the 0% level, looking for potential uptrend, and then what happens? It breaks again to the downside. So now we're flipping back, and this is why you got to remain, very versatile. We flip back, 61.8's hit right here, then we actually break 0%. So I'm going to refib this level down here. We came up, we actually moved right from 88.6 past 0% again. And then remember, we don't, unless we hit this 38.2, guys, we are in a downtrend. So in this example, let's say hypothetically, this doesn't hit 38.2 right here, and then we push down, we would just refib to this new low, then we came up, we hit this 61.8 level, so we're still in this downtrend. So on the daily time frame, I'm thinking, okay, I'm in a downtrend right now. Then as I bring everything back on like this, take all this off, right here, we hit this 61.8 level, like that, and then I would go directly from this daily time frame. I've got my multiple confirmations here. I've got this bearish engulfing 61.8. This is obviously support, now turned into resistance. So there's multiple confirmations there. And then I would just look exclusively on this lower time frame. I would say, where's my next lower high? Where's my next potential entry? This was that bearish engulfing. This was the first entry opportunity right there. My next entry opportunity only comes at a 38.2 level. We just pulled back, hit 38.2. So if we were to short this right now, this is what the short would look like. Stops would be above this level. Targets would be at -27 first. And remember, it's really just about 1-to-1. Once we get to 1-to-1, we can roll stops to break even and then really ride these trades out. And if this thing went all the way to the real target, we'd be at about 3-to-1. So that was kind of real quick, just going over USEF. It's in a downtrend on this 1 hour. Daily time frames in a downtrend as well. Those are the two time frames that I'm using to kind of correlate things. And that would be the opportunity. So for the risk, if you guys just get the free course, there's an entire document about risk, about the lot sizing to use and everything like that. So I would just go in and get the free course. I'm sure you can bump up your risk book. So for beginner, if you're gonna risk 1%, you need at least like $250 realistically. See what y'all see reduced by, but is this not valid? So yeah, that's pretty much it for the session, guys. I'm gonna put out for you guys that are in the signals, you don't have to pay attention to this. For you guys that aren't in the signals, I'm gonna put out a video that's gonna recap all the trades that were given out this week. I'm gonna go ahead and just pull up real quick the chat and just go over kind of everything that's inside there. So all of our trades, guys, were given out in the signals room. We do give out our analysis as well. So as you can see here, going over, looking for similar things we just went over in this session, breaks of trends, looking for those first higher lows for entries in here. And this goes over and over again. We deliver a lot of analysis for you guys along with the actual trades. We gave out this gold trade, I believe, on Wednesday. What is it? The 12th. So I'm missing over it. But yeah, so we're giving out about 1 to 3 trades per day. Let's see if I can find this. This week got a little slower towards the end of the week because I got sick, so I wasn't putting out any trades. But the format's going to be, let's see if I could find this. USD sell. So all the formatting will be like this. We'll give you the sell order. All right, it'll give you the price, the stop loss, the TPs. People have been asking questions about that. So every single trade will come with this. The analysis is just for your like learning, like educational, educational like opportunities. Like you guys should use the analysis, be making your own decisions based on the analysis. And ultimately the goal in the signals, guys, is to make money, but it's also for you guys to learn, how to become better traders. You guys should use the positions to educate yourself, to learn about the entries, why we're getting in on them, where we're taking them, and everything like that. And obviously you'll be able to benefit from it. So I'm gonna do a recap video of this most previous week. I'm gonna drop it in the Telegram and the Discord. This will also be uploaded to YouTube, this entire webinar for you guys that joined late. And I'm not gonna get too in depth with it right now, but for the products, as you guys all know, the signals is 75 a month. The trade copier, which is our account management service, is 25 a month, and then the full course is 499. The signals is on sale right now for 50% off. So I'm gonna update that today. It's currently 37.50, and it's not just the first month. It's the length of your membership. So it will always be 37.50 if you sign up with the discount. So I'm gonna put out some details on that today, guys. And if you're interested in getting in the program and joining the course, doing one-on-ones with me and Nick and working with us more, you could schedule a call with me and I'll go over what's like the entire curriculum and everything that you would actually get from us. And I know a lot of people message me and they're like, "Oh, I bought this course and these people disappeared." I mean, we're certainly available, and we're not going anywhere. And it is a lifetime membership, so you're always going to have access to the material and the future material. So yeah, that's pretty much it, guys. So
Yeah.
thank you guys for hopping on, and we'll catch you guys on Sunday. Sunday's
Yeah.
the next free
Sunday
session.
market blitz. All right, peace, guys.
Yeah, so Sunday we'll have
Oh,
the
like
Sunday.
it.
Yeah, Sunday we'll have the Sunday Market Blitz. It'll be at 8 p.m. Eastern time. So if you guys are asking about the analysis in here, we're not gonna do much analysis right now. We're just gonna on Sunday we go over all the pairs for the week. You can rewatch that video on the YouTube channel again. And yeah, we've got a bunch of people showing some support out here in the chat.
All
No,
right.
we appreciate
Yeah,
you guys hopping on, staying on for the over an hour for the session.
yeah. This was a solid session, guys. Yeah. So look for this upload if you guys want to watch it, or if you caught it late, post it to YouTube, and we'll see you guys in the community.
Sir, hope you guys have a good
Doing
weekend.
everything.
Right.
Peace, guys.
Peace out.